subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time.
So, good morning. It's nice to have you in our channel. My name is Mr. Lilly, and it's rather spectacular what's going on in the markets. And we know we like to make sure we keep daily updated on what is going on. So, what we would like to tell you is to make sure you look after yourself. So, you know, I've got my iris moss, I've got my sea moss, and I'm keeping very healthy in these current times, you know. So, what is going on? So, I hope you're keeping healthy. I've got my iris moss, sea moss. Normally, we start our day with affirmations. My daughter's not here, but normally start our day with saying smart, strong, powerful. It's going to be a mighty day and wise. Thank you, Jesus. So what is going on? The big question many people are asking is Bitcoin bull run over? Because bear in mind, many people came here 8th of February when Elon Musk started buying Bitcoin. Many people came in. We can see at that time the price of 8th of February was about 43,000. Let's see, 8th of February, 42,000. By the time many people probably knew about it, 9th of February, around 43,000. And therefore, many people are at a loss because right now we are 25% from all-time high and we are roughly at 43,500. So many people are at a loss. But is it over is the question. What we know, because it's about looking at history. History charts are good for our hearts, trends are our friends. If we look at the last bull run, we can see here, in June of 2016, 38% drop. So this is 38% drop. Here, another 38% drop, 33%, 38, 36, 29. So we've had six big drops before we got to the peak in 2018 and it was fully over. Yeah, so these drops here are not, and we've only had, I think, 30% so far. So many will tell you it's not over when it's still within what is normal. And these drops are normal because right now we're 25%. That is still normal. Some targets, so we can see the support level here of 42,000. If we get to like 38,000, because let's see, 58,000 times 0.7, because that would be 70% less, so that would be a 30% drop, is what? 40,600. So 30% is a normal, is 40,000 is still within what is normal. We can see even 38% here. If we go to, let's try 38%. So that's one target. That is still tied and normal. 38%, we'll just say 40% just to round. So times 6. 0.6, 34,800. So if we went all the way to 30,400, we're getting close, which is where? Round here, where we were at, all the way back to where we were the 2nd of February. So it's only the start of the month. So if you go back to all the way where we were at the start of the month, the bull run technically could be over. If we're dropping below all of that, more than 30, 40%, then it's very time to be even more careful. Although there's some that talk about what happened in 2013 when we dropped majorly and stuff and it carried on, but some will say that doesn't mean it was a lot. It was 2 bull runs in that period. It's not one, because a bull run cannot be a bull run if you're doing big drops and maintaining those drops. The point of a bull run is running bullish. It's going. So that, but in all, and what's interesting to see as well is futures. So also looking at, because futures predict the market. Because people setting shorts, or whether they're saying how much shorts that's going to go down, or if they're going long, saying they predict the price to go up. If you look at what's going on, we can see Binance has so many futures all together. We can see there's kind of an average 50 billion linked to futures. So there's an average. If you see people stop using futures, because sometimes futures are used to hedge. Hedge is when you like manage your risk. For example, you have a house and you manage your risk with insurance. So in case anything happens with your house, you hedge the risk of what could happen with your house by paying insurance every month. Some people use futures to hedge their investment. So if they're going to buy Bitcoin, they might use some futures to balance their risk. But if you balance your risk, you also changing how much profit you make, because remember, it's a risk versus reward curve. And in my other video, we looked at risk versus reward. We looked at the 5 stages of the bull run as well. So whether we're in euphoria stage and greed, and that's when people start selling. So that's when to look for, when the bull run will be over, when we're in full stage greed mode. Because remember, even Warren Buffett says it's very be careful when others are greedy, and be greedy when others are being careful. But we can see, yes, the futures are very good to look at, and we can see even here, so average of 32% saying buy. Yesterday snapshot, 72% still believed to be buying, 96% believed to be buying. So the 7-day average, 20-day average is buy, 20-day and Bollinger is hold. So the average of 20 days are hold, average of 50 days only 25% are buying futures. The average of 100 days moving average 67%. So many people are still on a long term. They're still hedging. They're still buying when we look at the average. But future contracts. So what are futures? So future contracts are standardized agreements that typically trade on exchange. So futures are like securities, contracts, just trading on exchange, same things will go up or down. One party agrees to buy a given quantity of securities or commodity and take delivery on a certain date. So you're buying it later. You're putting a contract now that you will buy it, fulfill that contract later. So, and that is linked to GME, which we could remember, GME futures, people shorting it big, got over 140%. And last week we saw those that held. So I was at $300. I was holding, I bought back when it dropped to $100, so I brought my average price down. I bought back again when it got to like 50 something, I brought my average price down till I got into like 89. And then many people were saying it was over. Remember, if you look at my previous videos, we were saying it's all drama, what's going on, there's going to be a court case about whether Robinhood and other people try to manipulate us being able to buy it and things like that. And what I actually have to rate with GME, because I noticed they've got another ticker. So they've also got another companies like G2MC or something on the European Germany exchange. So if the Nasdaq and American, not New York exchange, is doing things and stopping people being able to buy, you've got the German stock exchange, which I saw they brought out in January and stuff. So I feel their strategy for making sure there's no manipulation going on is very good. And I managed to get back in profit, which was a great thing. So diamond hands, remember diamond hands are the ones that hold through tribulations and stuff. All the people that say it was over, well, I managed to get back in profit and stuff. And it's still going on. Let's see, Seeking Alpha, because if we look quickly, Seeking Alpha. So Seeking Alpha is a good way you see all my portfolio and stuff like that, and I can screen all my things that I'm seeing. And we can see even after market, it's still, because there was a day last week where it went like 100% basically in a day, and then the next day it did 50%. Let's see if we can see GME. And the stock market was doing very bad the last 2 weeks. Even AMC, yeah, they were doing nice. And stock market and Bitcoin are working together in a sense, because if the stock market, people are losing money, they think it's going to be a crash like it was in March with COVID, then even Bitcoin, they're not going to be holding. So we are hoping that this last 2 weeks of this reddish days in the stock market where everything was red, we're hoping that's over, because that will affect Bitcoin. If people get scared of the stock market, they'll change their money into like cash and other stuff, and they'll pull out of Bitcoin. They could, or most probably would also pull out of Bitcoin. But where's GME? So GME, I might just look at the normal charts actually. So GME stock. So GME stock, yeah. So for long, we see we were around, that's 1 day, so 5 days. Look at this. So just on 23rd, we went $45. And then on this day, went from $48 all the way to $170. So what's that? 40, 48, 50. So that's like 200%, isn't it? Times 2, 50 times 2 is 100 times 3. So times 3, you can say it's a 3x, so 300%. Increase, 170, then it was dropping up and it's doing whatever it's doing. But we managed, those that held and bought high, and if you bought on a dip, this is how I managed to be able to get back my money and hold and see what happens. So the short squeeze is not over, because yes, what happened in the last data as well, we saw the new report for the short squeeze. This is what's interesting, because there's always 2 that come out each month. And we see in FINRA, FINRA short interest. I keep calling it short squeeze. But in FINRA's report, the new interest that came out for GME was like 78%. Because we can see here so the 24th on the 9th was when we saw it was like at 70 something percent. Then this one came out on the 24th. The next one will be on March the 9th. So that'll be a next interesting date. What will happen to March the 9th? But we saw, what was it? Let's see, GME. So GME, we saw it was like at 70, I think it went to 60%, which is still high. Remember 10%. What am I looking at? FINRA. Now I want the FINRA fundamentals. No, that's not what I want. Equities and options, DLs, I think is this one I want. Yeah, but we saw it was like 60%, I believe. Yeah, GME here. So if we look, yes, short float, 60%. So remember, that's saying out of the altogether, market cap is 7.2 billion volume. So we're seeing out of all the outstanding floats, all the floats all together that are available for everyone, but some are locked for certain people. So shares outstanding is 69,075. But out of the ones that are available, can't see where they put this on this chart, because you got the available float. And then out of those available float, how many are linked to shorts? So 60% of the available floats are linked to shorts. So that's still very high, because 10% is high. More than 10% is extremely high, but 60% is extremely high. So we see the short squeeze is not over, because it's about maths. Because remember, it's about if people just buy it and hold it, eventually those that shorten it, they have to be able to buy that if it goes against them. If it goes up in price, they'll be have to buy it. And if they buy it, it's going to push up the price. And that's what the whole short squeeze thing is about. So then there's manipulation of people that's trying to do short ladders to bring it down. This is what we're seeing with AMC and GME and things like that. And even with Bitcoin. So even with Bitcoin, it's the same thing, because we're talking about price manipulation with Bitcoin and miners that are mining, and whoever has the most mining power, by putting on exchanges so you create more supply, then you can manipulate prices and take away. So, but let's see, future contracts we've seen are just a contract, the selling party to contract agrees to provide. So you're buying it, you're agreeing to buy something at a future date. So BTC future expires the last Friday of every month. So we'll see what happened this Friday when loads of expiries are gone. Loads of contracts have to be fulfilled. And we can see the Bitcoin mining. So some people talk about the manipulation that can go, because the Bitcoin mining transfers to exchange also seem to violate the above metrics by illustrating that higher volume sent to exchange leads to a drop in price. For example, the fall at the beginning of January preceded a consistent increase in miner exchange inflow. So if miners are getting more Bitcoin and they are throwing it on the exchange, because putting an exchange is where you can buy and sell, isn't it? So you're providing more supply, and if the demand is the same, too much supply, you're going to bring down the price. Whereas if you take it away and the demand is the same, less supply, more demand, prices go up. So whoever has the most mining power, theoretically, they could say they can manipulate the market, and this is what people are saying. But futures are very good. So to short Bitcoins, you need to contract a trading agency or platform and place a short sell order. The agency will then sell the Bitcoins from their own supply based on the assumption that in the future you will repay them with an equal number of Bitcoins. And this is what was not happening with GME. So when GME were meant to be selling shorts, they should have sold their short position, so they made money, knowing that later on, whatever happens, you will then buy it, they would then buy it back at a shorter price, basically, actually. So if they're selling shorts, they would have then borrowed it from their clients and then later on bought a shorter price if it did go down, basically. But they did not do that. Many people are not doing that. They were selling the shorts but not actually linking it to real shorts. Then what have we got? Yes, a CME group. Many people get Bitcoin futures from them. But how do future contracts affect price? If the price of an underlying commodity goes up, the buyer of the future contract makes money. If the price goes down, the future seller makes money. He can buy the commodity at today's lower market price and sell it to the futures buyer at the higher agreed upon price. This is what we're saying with GME. I can borrow it. If it goes down, so I'm the seller of the shorts, I can sell you the shorts. I can sell you the shorts. If it goes by, I buy it down later. I've made money, although you've also made money as well if it goes down. So what else have we got? We've also got futures. Look into the future to lock in a future price or try to predict when something will be in the future, hence the name. Since there are futures and indexes, S&P 500, Dow, 30, NASDAQ, Russell, so these are all indexes that trade virtually 24 hours a day. We can watch the index futures to get a feel of the market direction. So looking at Bitcoin futures, how much is there, the volume, how much is shorts, how much is on long, can predict what we think is going to happen as well, which is what people do on some metrics. So a future market is an auction market in which participate buy and sell commodity and futures contract for delivery on a specified date. But why do people use futures as well? So what are derivatives? So derivatives are securities that derive their value from an underlying asset or benchmark. Common derivatives are futures. So futures are derivatives, just contracts basically. And using futures to using future contracts to hedge. So a long position is the buying of a stock, commodity or currency with the expectation that it will rise in value in the future. For example, suppose that company X knows that in 6 months it has to purchase 20,000 ounces of silver in order to fulfill an order. Yeah, so people use hedging to futures to hedge. So using futures contracts to hedge a long position is the buying of a stock, commodity or currency with the expectation that it will rise in value in the future. On the other hand, if a company knows that it will be selling a specific item, it may decide to take a short position in a futures contract so that in case later on when it drops in price, they can buy it at a cheaper rate because they know they're going to have to buy it. So hedging against investment risk means strategically using financial instruments or market strategies to offset the risks of any adverse price movements. Put another way, investors hedge one investment by making a trade in another. A reduction in risk, therefore, always means a reduction in potential profits. Just like we talked about buying a house. A hedge in investment that protects your finances from a risky situation. Hedging is done to minimize or offset the chance that your assets will lose value. It also limits your loss to a known amount if the asset does lose value. It's similar to home insurance. Like we said, you buy a home, but you pay a certain amount each month in case something happens to your home. So you're minimizing the loss your home could give you. People use that for trading as well. So you're basically buying a long position and buying a short, buying a long position and buying a short position to hedge. So you're in between where you could be in minus for the buying and where you could be in minus for the short selling. In this middle values where you'll be bouncing either, where you'll be making either a certain amount of profit before your short is helping you, or you're making a certain amount of loss before your buying is helping you, and things like that. So you're hedging, you're in the middle here. So people do that with trading as well, but to minimize the risk, minimize the reward as well. So what were we looking at? Yeah, so what's interesting, remember we were saying the 5 stages of euphoria, how much when FOMO's here, many people going. What's interesting is when you look at exchange balances, so how much people have it on exchanges and things like that. But long story, we are seeing that it does not mean the bull run is over. Like we saw, we have to look at when we get to like 40,000. If we get to 40,000, that's one, like that was like 30%. If you get to 38%, 38,000, then that was what, 40%. So that is when we really have to be, even from now, people are looking, but from we can see from what's going on in exchanges, what's going on with futures, we can see it does not look like it's over. But it's not financial advice. It's all about making sure you only put in what you're willing to lose and looking at other altcoins, because altcoins, and look at my previous video, because I've done a video about why I'm staking into, why I even got into crypto in the first place. It was more about, not about Bitcoin and all that, is about airdrops and getting things for free. And then now being able to stake those things you got for free that you're making so much money. So there's airdrops is why I got into crypto in the first place. And there's more airdrops. Look at my previous video. And have a fantastic day. Check the website because it's all about, we got, subscribe to my book called You Are Rich, where it can teach you how to play the same game the rich do by investing in yourself, thinking about how to stop procrastinating, taking self-control and doing things to make sure you're able to hedge your money and hedge your risk and things like that, and thinking smartly. But I also got this because it's not just about the financial market, it's also about investing in yourself. So Divine Wholeness, available on Amazon, Kindle, and we got chapters like Your Money is Stored Up, Wealth is Stored Up for You. Got chapters like Your Silence Speaks, so don't let your silence speaks. We got chapters like Live. We got Poetic All of it's really poetic, actually. But we've got a very poetic soliloquy as David soliloquizes about his life, King David, and we look through and maybe we learn stories of how to never give up. Imagine being told you're going to be a king from a young age, and you were fine chilling, doing what you were doing, and told you're going to be king, and then you start working for the king and he wants to kill you and all these things, and you have to run from your family and all these things, and as God blessed you, what's this going on, why is this happening to you, kind of thing, and all that. Learn not to give up. It's a very inspiring story, so make sure you check it out. Make sure you check my website, Learn to Play the Same Game the Rich Do, and we've got the Telegram group as well in the box below, so you can keep updated. But till then, stay healthy and have a great day.